if you have Bitcoin, will you win?
100%. Uncle Larry Fink, for anything, that is, he will do everything possible to shake out as many holders as possible to acquire the Bitcoin and put it in their control.
Yeah. Yeah.
They want to
So,
control. They don't care about anything else. They want to control Bitcoin because once they control it, they can do whatever the hell they want to do with it. If you are on leverage, even a smaller move can multiply your gains. Same way, a smaller move against you could destroy.
welcome back to Satoshi Sundays number 4. By the way, Satoshi Sundays is with my dad, and if you are not following him on X, you definitely should. He is at Global Hodl, and he is very, very active and has some very entertaining posts. No bias. I'm being objective. So today, I hope you guys are having a great Sunday. Happy Super Bowl Sunday. Go Hawks. I'm super excited for later today. But before then, we are going to have a great chat about some of the things that have been going on in Bitcoin this week, talking about the price dump. We just hit 60K for a little bit this week, which was interesting. I woke up this morning and saw an X and everyone's like 60K, 60K. I'm like, okay. All right. But yeah, we're going to talk about that. And I think, Dad, how are you doing today?
I'm doing well. How are you?
Good. Yeah. Do you want to get right into it?
Yes, let's jump right in.
Okay. Sweet. Just tell me then what's been going on with the Bitcoin price this week.
Yeah, the price action has been disappointing to say the least. But hey, at the end of the day, it's Bitcoin. It will do what it wants to do. It doesn't care about how you feel about the price and whatnot. And I think there are a few things that are going on at this point in time. One, I think, as you touched up with James Lavish's episode, um, Bitcoin is the most liquid asset in anybody's portfolio. And whenever they are in need of liquidity, Bitcoin, especially in after hours, in over the weekend, Bitcoin usually is the first thing they will sell because they can. You can't sell your S&P 500 over the weekend. You can't sell your gold bars from the vault. You can't sell your real estate over the weekend. You can sell Bitcoin in matter of minutes, if not seconds. Right? Even if it was in cold wallet, all it takes is you plug in your cold wallet to your laptop, push your Bitcoin to the exchange, 10 minutes, settles, put a sell order, you get your money, and less than 24 hours, you have liquidity available to do whatever you need to do. Now, the key question comes, why do people usually need liquidity? And in most cases, the need for liquidity arises when people are leveraged. What does it mean? It usually means when you borrow money to do anything, to buy Bitcoin, to buy other investments, or betting, gambling, or whatever you may have. And what happens is when the price moves. So let's take a step back. A lot of people have borrowed against their Bitcoin. How does this borrowing works? So what do they usually say is, let's say you have $10,000 worth of Bitcoin. You could go to one of these, exchanges or companies. Let's take Coinbase for an example. You could go to Coinbase, put 10,000 worth of collateral in Bitcoin, and you can borrow up to 50% of that. So basically what you can do is you can put 10,000, you can borrow 5,000. And let's say when you did, the price was at 100,000, right? Now, the price drops. The price goes from 100,000 to 70,000. when you borrowed, your loan to value, so your value was 10,000, your loan was 5,000, so your loan to value was 50%. Now the price of Bitcoin goes from 100,000 to 70,000. So your collateral value drops from 10,000 to 7,000. Your loan stays at 5,000, right? So
Yeah.
suddenly your loan to value jumps over 70%. So a lot of these places, they have something they call as liquidation value, right?
Okay.
At certain loan to value, they will kick off liquidation. What does it mean,
Okay.
liquidation? They'll basically say at this point in time, if the price drops below this or your loan to value rises beyond this point, we will sell on your behalf so we can recover our money, and whatever is left, we can pay you
Oh.
back,
Okay.
right?
Yeah.
So extending the same example that we had, typically loan to value is anywhere between 80% to 90%. So let's assume 80% for simplicity,
Mhm.
right? Price of Bitcoin went to 70,000, your loan was 5,000, your collateral is 7,000, your loan to value is 70%. Price of Bitcoin drops to 60,000 because it can. Your loan stays at 5,000. Your collateral drops to 6,000. Now suddenly your loan to value is above 80%. At
Yeah.
that point in time, they will sell your Bitcoin automatically, take out their 5,000 and give you back your 1,000. I'm ignoring the interest in there, but
Yeah.
they basically said we'll sold it, right? Or basically they sell Bitcoin worth of 5,000 to take their money. That puts a sort of a selling pressure on Bitcoin.
Okay.
Now, they don't directly do that. They'll start giving you warnings in between. Like when your loan to value falls to 60%, 70%, they'll say, hey, loan to value is increasing. It's reaching the risk levels. Add more collateral. So at that point in time, you have options. You can either pay off some of the loan. So let's say your loan was 5,000, you can pay off 2,000. So your loan is now 3,000. Your collateral was 7,000. You suddenly are below 50%. You're okay. Or you could put more collateral. You could basically say, hey, here is another $5,000 worth of Bitcoin as collateral. So now your collateral goes from 7,000 to 12,000. Your loan is at 5,000. You're suddenly below 50%.
Okay. With this, couldn't you keep borrowing against your Bitcoin and then keep adding that Bitcoin in as collateral and just keep it going?
You can if the price has accelerated pretty high.
Okay.
If you borrowed when the Bitcoin price was 100,000, let's use the same example. Let's say the price was 100,000. You had $10,000 worth of Bitcoin. You borrowed 5,000, bought more Bitcoin, put as collateral. Great, it works, right? Your loan is at 5,000. Your collateral is at 15,000. Cool. But a certain point and a certain price point, if you keep doing that, like Bitcoin can fall. If you look at the historical cycles, Bitcoin has fallen 80, 90%. Like we touched like 60,000 last night for a fraction of a second, right? 60,000 is more than 50% drop from all-time high in October 2025, right? And who's to say we can't go to 50 or 40? At some point in time, you will run into trouble. And that's the reason leverage is risky, right? So unless you keep your leverage super low, you can run into problems, right?
Right.
So if anybody is using any leverage, first of all, if you are young, you don't have a lot of capital, do not use leverage.
Okay.
Okay. Keep buying. Because if you have at DCA, you are not on the hook to pay somebody back. You can weather the
Yeah.
storm.
Yeah.
The price could go to 20,000 tomorrow. And a year from now, it could come back to 200,000. And since you didn't owe anybody money, your $10,000 Bitcoin would go to 20,000 because you
Mm-hmm.
bought it at 100,000, went to 200,000. Fine. It went to $2,000. Now it's worth $20,000. But because it was your own money, you're not answerable to anybody. You don't owe anybody any money. You can sit on it and wait for the
Correct.
storm to pass.
Yeah, true. So then what would sort of incentivize someone to use leverage to buy Bitcoin?
Leverage allows you to grow your gains faster.
Okay.
The simplest example where people use leverage all over the world, especially in the United States,
Homes?
when they buy a home.
Yeah.
You usually put anywhere from 5% to 20% down payment, right? Let's say you buy a house worth $500,000. You gather your 20% down payment, $100,000. You borrow $400,000. What is the hope? So you are essentially leveraging 1 to 5. You're 5x
Mm-hmm.
leveraged. For $100,000 down payment, you bought a $500,000 worth asset.
Yeah, that is.
Your hope is the price of home would not fall and slowly keep growing over time,
Mm-hmm.
faster than the interest rate that you're paying, so you will come out ahead, right? But if the prices of homes were, you could measure that tick by tick, and they were liquid like Bitcoin or any other stock, you would not be able to take 5x leverage. Like 5x leverage means a 20% drop and you're wiped out,
Yeah.
right? So if the home price goes from 500,000 to 400,000, you owe bank 400,000. Bank will come and liquidate it and takes it 4,000.
Yeah,
And what
and
do you get? Zero, right?
mhm.
And imagine if you scale this, like the examples James was giving on your show, like 100x leverage. 100x leverage means 1% move and you're wiped out,
Mhm.
right? And the same way, if the 1% move goes on the other direction, you make
You
multi-fold,
make lots of money. Yeah.
right? So in the house example, if the home price goes up by 20%, so from 500,000 goes to 600,000, suddenly your $100,000 become $200,000 because you still owe bank $400,000, right?
Yeah.
So your equity goes from 100,000 to 200,000.
Right.
A 20% jump, your gain is 100%.
Yeah, wow.
Right? That's the reason people use leverage.
Okay.
So that's the first reason. Right? And there is unlimited amount of leverage available in the world. Like you can go to all these dexes. Hyperliquid is one of them where people like to do these levered Bitcoin plays and other crypto plays. But you can play it any which way you want, right? Then there is definitely this derivatives market which puts a lot of pressure. Like to give you an example, like there are people who are using their IBITs, like the Bitcoin ETF and MicroStrategy
Mhm.
shares, and you know writing derivatives against that, which puts selling pressure. Like so, there are a bunch of these ETFs. Let's take an example of ETF from NEOS called as BTCI. It's a
Mhm.
Bitcoin income fund. Essentially, what they do is they write covered calls on IBIT,
Okay.
right? Or any other Bitcoin ETF for that matter, right? Essentially, what they're saying is they're putting up a selling pressure on that and collecting that premium and using the premium as income,
Oh. Oh, interesting.
right? Like a lot of people do that,
Yeah.
right? Similarly, there are a lot of and there are a lot of hedge funds and other large investors who would also like to hedge their positions
Mhm.
using either IBIT derivatives or MSTR derivatives. So if they are long
Okay.
Bitcoin, they'll go short IBIT or MSTR.
This is risky though, isn't it?
Yeah, but like that's how they make money, right? If you're playing on leverage, if you imagine, so if derivative is also a leverage play,
Okay, yeah, I see that.
right? So if you're on leverage, even a smaller move can multiply your gains. Same way, a smaller move against you could destroy your gains completely.
Right.
So when you are maintaining large portfolios, you have to deploy strategies to hedge some of this. Like say if somebody has $1 million portfolio,
Mhm.
right? And you are you are a hardworking person, maybe in your 40s, 50s, you still have 10, 15, 20 years of working life ahead of you. It's money is in your 401k. You can't touch it for another 15, 20 years. Market drops by 20%. You don't care, right? You don't care. Like, fine, it goes 20% down, 30% down.
Mhm.
It has done that multiple times in the past. Like, most recent one was the tariff tantrums in last
Yeah.
April.
Yeah.
Like, we dropped like 25% in that range.
Mhm. Yep.
Before that was 2022. Before that was COVID,
Mhm.
2018, and so on and so forth. But if you have
Yes.
time on your hand, you're not leveraged. You can, like I was saying earlier, you can weather the storm. But if you if like either if you have liabilities or entitlements that you have to fulfill, for example, a pension fund,
Mhm.
like a pension fund collects money and then basically say every year or every month we have to pay the holders a certain amount of money as income. They cannot
Yeah.
afford to take 20, 30, 40% loss because they have a liability
Right.
that they have to pay. So for those kind of things, they use derivatives for hedges, but that also builds a lot of selling pressure.
Okay.
Right?
Okay.
The
Yeah.
the third thing is, for a minute, think about the fact that, let's say you had $100 million and you wanted to buy $100 million worth of Bitcoin. Right? You were a hedge fund, or you were for some large fund, 100 million, 500 million, a billion, whatever. Pick a large number, right? You want to buy that amount of Bitcoin, right? Would you want to buy Bitcoin at $100,000 or would you want to buy Bitcoin at $60,000?
Yeah, I wanna buy it at $60,000, yep.
So what they would rather do is they will deploy 5, 10, 20% of that money. Again, I'm not an insider, so I don't know exact thing, but this is how I'm reading the world. But or how, if I was in this situation, how would I think about this, right? I would deploy a part of that money, short that thing, pull the price down, and then deploy the rest of the capital, right? And from all the signs that we have seen in last 12, 18, 24 months, they're all pointing towards that the large cap money, large money or the smart money or the big money is all trying to come in slowly, right? Like Bank of America recently said 4% allocation is recommended to Bitcoin.
Yeah. Yeah.
Imagine 4% allocation. The worldwide capital, if you ignore certain parts, the overall wealth is about $250 billion.
Mhm.
Let's say, some of that is utility, the homes that you live in and whatnot. You remove that. Let's cut it into, down to 30%. Right? 30%, let's say, is investables, the financial assets that people can use 4% to deploy to Bitcoin.
Yeah.
4% of $300 trillion is $12 trillion.
Yeah.
Bitcoin is today what, like 1.5 trillion?
I thought it was 2,000,000,000,000.
Yeah, it was 2 trillion when it was over 100,
Okay, yeah, now it's
100,
about to be 1.5, yeah.
120K, something like that, right? So we are close to like 1.5. Even if you
Mhm.
say 2 trillion, right?
Mhm.
2 trillion to 12 trillion is a 6x,
Yeah.
right?
Wow.
So this large, the big money would try to play games to, buy it as cheap as possible. And in addition, they not only want to buy cheap, they also want to buy as much as possible. So what happens when these steep drawdowns happen? Normal people, right, who just got in, like I'm pretty sure, like, if somebody bought in, reading exposed, watching podcast after the 2024 election, and they did not do their work and study about Bitcoin,
Mm-hmm.
they would have probably sold it yesterday. Enough, I'm out. Like yesterday, it was like a free falling knife. Right? So we saw two $10,000 candles, one red, one green, between 2 days.
Yeah.
Right? So what this also does is it shakes out all the people who do not have their own conviction and were there just to make quick buck.
Mm-hmm.
It shakes them out. And
Yeah,
that's
totally.
what big banks, investment, banks, all the asset managers, that's what they like to do every single time.
Yeah. Yeah, I mean, at the end of the day, they want to buy it as cheap as possible. And I guess when you have that much market power, you can
It's
move the
no,
price,
that's only
especially
one
with
part.
something like Bitcoin.
Buying cheap, but buying as much as possible. And if it's scarcity, if the amount is limited, you have to
The
shake
amount that you
somebody to
have. Yeah.
drop it so you can buy it. And that's what these kind of moves do.
Yeah. Which is quite
Right?
exploitative if you think about it,
Yeah, but it's all
but
legal.
it's
Right?
how the game is played, right?
This is how the game plays. So the
This is
best
not
thing,
specific to Bitcoin.
exactly, they do it to every single thing.
Yeah.
Right? I learned one thing after many years wasting not understanding how money works. But one thing I realized when I started researching what money is, Wall Street only cares about one thing. That is to make money.
Yeah. It's Wall
Wall
Street.
Street doesn't want to do anything else. Right?
Right.
Wall Street did that. So I think I was reading something. The top 3 asset managers, BlackRock, State Street, and Vanguard,
Yeah.
they combined have about 30 trillion worth of assets. Right? And I think they owned 70 or 75% of S&P. Like, so 70 to 75% of S&P is held under these 3 asset managers.
Mm-hmm.
Sure, it's not all their money. Most of the money is from the investors, from other large investors. But since they manage it, they have a bunch of power. And if I trust Uncle Larry Fink, for anything, that is, he will do everything possible to shake out as many holders as possible to acquire the Bitcoin and put it in their control.
Yeah. Yeah.
They want to
So,
control. They don't care about anything else. They want to control Bitcoin because once they control it, they can do whatever the hell they want to do with it.
yeah, I mean, they're no different from politicians, right? But wasn't Larry Fink, he was against Bitcoin like not even a year ago, right? Or maybe it would have been a year ago, year and
It's
a
a little more than
half-ish.
that. He was against it during the previous administration. He's publicly said very, very
Yeah.
mean and disgusting things about Bitcoin.
Yeah.
But
It
then
was
in 2023, BlackRock came and filed for a Bitcoin spot ETF.
was it 2023?
2023, they
Okay.
filed, it got approved, and it launched in January 2024.
Yeah, okay.
Right? And since then, he has completely flipped. Now, even in Davos, in the World Economic Forum, he was talking
Yeah.
about tokenization, digitization. He was talking about India, Brazil.
Yeah.
Look at
So,
them. Look at
why do you
us. Kind
think
of
that
stuff.
he flipped?
Because he wants to control the asset.
So he just realized that.
He realized that this asset isn't going anywhere. If the asset
Okay.
isn't going anywhere,
Yeah.
I would rather control it
Yeah.
than, let it do what its own thing.
Mm-hmm.
Right. So
Yeah.
while I understand, so, I have these two competing thoughts in my head when I think about Bitcoin ETFs. Right. I wouldn't call it, paper Bitcoin and whatnot. I know there are a lot of FUD around paper Bitcoin and whatnot. I would hope and trust that that's not the case. They hold,
Mm-hmm.
you know, uh, actual amount of reserves for Bitcoin as the number of hybrid shares.
Yeah.
But I I would trust, like, so two competing thoughts that I have in my head is, on one end, for Bitcoin to become a meaningful asset in everybody's portfolio, ETFs have a very crucial role to play. Like we
Because
talked
they
about
make Bitcoin accessible.
it makes Bitcoin accessible, easy. I can get in and out. I don't have to
Yeah.
learn anything new. It's just like buying,
Yeah.
S&P 500 or NASDAQ
Right.
or any
Right.
other Apple stock or Nvidia stock. I could just buy, I bet. Right.
I do think that from a from a psychological, that's the word, psychological standpoint, legacy institutions are going to be very important here, right? Because these are the things that people trust. Like if you went to somebody who is a little bit older than you, and you asked them, would they buy Bitcoin from, let's say, River, or would they buy like a Bitcoin ETF from BlackRock? They would probably pick the one from BlackRock, right? Because it's been around for longer. Older generations trust it. So what is the negative sentiment against ETFs?
The
Like, what is
negatives,
the
yeah,
other?
the negative sentiment, I won't call it negative sentiment, but the competing thought in at least my head is, once they have enough Bitcoin, they'll be able to, move the market the way they want. So what we saw yesterday, I don't think this was the first and I don't think it was the last. We'll see
Right.
plenty of these things. They will keep trying to shake people out, because don't forget, they're the market makers too, right? Look at what happened
Yeah.
to Strategy's share, right? Strategy, from its, the all-time high of $543 back in November 2024. And yesterday it went below $100, right? They squeezed it under 80%. I think what they're
Mhm.
trying to do is they're trying to shake Sailor
Mhm.
to start puking Bitcoin. And I don't think Sailor is going to do that.
Okay.
Right? So
Okay.
so on one end, they want to make it accessible, but they also want to control it, and not control it in a way that they can manipulate the rules, but they can manipulate the price, or at least
Yeah.
move the price.
Right. Okay. But realistically, how much Bitcoin can these institutions acquire, right? Because it can't be enough to control all of it.
You don't need to own all of it. Because if they own all of it, Bitcoin's value is zero,
Yeah.
right? Bitcoin only holds value as long as it is largely distributed. But what they can do is, so here is the thing, right? If you look at and I think you briefly touched it on your previous episode, but let's run through this. The supplies on exchanges is anywhere between 2.5 million, maybe even a little down over the last few months or whatsoever.
Yeah, it was the lowest
Yeah, but that you've been
since like
hearing it's been the
2018ish.
lowest
Yes.
for
Yeah.
forever, right?
Yeah.
If suddenly one player dumps 10, 15, 20, 30, 40, 50, 100,000 Bitcoin in the market,
Mhm.
and after like they go in the lots of 10,000 or 5,000 and bam, 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 they can keep pulling the price down.
Yeah.
Because what happens? So here's the other thing. If Bitcoin was largely held by large institutions, if one is dumping, others will think, something is wrong with this institution. Let me scoop it up.
Mhm.
But when today, more than 70% of Bitcoin is owned by individuals,
Correct.
right? When, let's say somebody has zero point zero 0.01 Bitcoin, they've been DCing for last 6 months and reach
Mhm.
0.01.
Yeah.
And they suddenly see the price move down 30%.
Yeah.
They'll freak out. Oh my
Yeah, they
God,
will.
I'm
Yep.
out. Right. And that's what happens. Like, and a lot of these people who would actually do this, a lot of this Bitcoin is actually sitting in the exchanges because at that point in time, they want to get out. They don't
Mhm.
care at what price. They just want out.
Yeah.
Right. So
Yeah.
these institutions, they have a lot of power in terms of moving the price they want. And guess what? I think it was late January, BlackRock submitted an application to launch a new Bitcoin income fund. So essentially,
Wait, what is a Bitcoin income fund?
yes. So essentially, what they will be doing is they will be writing covered calls to generate income on IBIT and distribute that income to the investors. Right. So, so for the listeners who don't know what a covered call is, very simply, covered call is essentially selling a right to buy at a premium, right? Say you have 100 shares of Apple. Apple was trading at, let's say, $200. You can say 30 days from now, I'm willing to sell Apple for $220. And the person buying that option is essentially this right to buy. That is the option. It's option because it's a right to buy, not an obligation, right? And in order to buy that, that person will pay you some premium. It could be, anywhere from 0.5% to 4, 5, 6%. So let's say you get $2, 1% of this, right? So somebody will pay you $2 today to buy a right to buy from you, to buy 100 shares of Apple at $220 in 30 days. Right. So you get $2 per share. So you get $200 in your pocket today. You can do whatever the hell you want to do. You can go take it out, go have a nice dinner. Right. And again, for all this, we are ignoring all taxes, and this is not a
Yeah.
financial advice, but that's essentially a covered call. But what
Mhm.
essentially you're doing is you are putting a sell order at 220 on Apple. Right. So you're putting a selling pressure in order to generate this $2 income.
Yeah.
And if BlackRock is launching a fund, it gives me two indicators. One, Bitcoin is here to stay. It's not going anywhere. If these people still have their thoughts about, oh, Bitcoin is doomed, this time it's different, it's going to go down to zero, good luck. Uncle Larry doesn't like to lose money.
Yeah,
Right?
that's true.
He doesn't like to lose money. He would not launch a Bitcoin spot ETF and then an income ETF on top on an asset which is going to zero.
Yeah.
Not going to happen. And for what it's worth, IBIT has been the most profitable ETF for BlackRock, even bigger than gold, right? So, and it's 2 years old. 2 years old.
Yeah. Yeah. Is there an option to buy IBIT in your Roth? So this is off topic. I can't
Yeah.
remember
Yeah.
if.
IBIT, you
Okay.
can buy IBIT practically in any account
Oh.
except your 401ks, employer sponsored, because usually
Oh.
401ks are restricted to the handful of funds that the employer
Mhm.
has approved. But some
Okay.
plans do offer some flexibility there as well. For example, if you have your 401ks with Fidelity. Fidelity has something called as brokerage link. If your plan supports that, you can enable that, and then you can buy anything you want in brokerage link. But in
Mm-hmm.
your Roth IRA, in your traditional IRA, in your solo 401k or whatnot, you can buy whatever the hell you want to buy.
Okay.
Right? In Fidelity, you can actually buy Bitcoin in your Roth or traditional IRA as well. They have something called as Fidelity crypto IRAs, where
Huh?
you can buy Bitcoin, ETH, Solana, and a couple others. Right? But you can do that.
Yeah. Interesting.
So coming back to this thing, when Larry Fink launches this new, or at least files an application for this new income fund, to generate more income, you need volatility in the price. The higher the volatility, higher the premiums. Right? I am pretty sure they will keep the price volatile for as long as they can, because that's how they generate decent income to suck another portion of assets under
Yeah.
their management.
Yeah.
So I think these are few things that I think are happening. So if you're not leveraged, just sit tight, keep your DCA. Whenever you see the price dip, if you feel comfortable, buy the dip. If not, just stick to your DCA.
Just
You will be fine in 5 to 10 years.
as of February 4th, 2026, total gross national debt is 38.56 trillion relative to 1 year ago. Total gross national debt is 2.35 trillion higher. Relative to 5 years ago, it's 10.7 trillion higher. So,
2.3
wow,
trillion in a year is
in a
right.
year.
This sounds about right. And this
Yeah,
rate
yeah.
will keep increasing because we are running a deficit too.
Over the past year, the rate of increase averaged 6.43 billion per day, 267.76 million per hour, and 4.46 million per minute. Wow.
I don't know if you've seen this website. Every American is in
Yeah,
almost
over here.
$113,000 worth of debt, which
Yeah.
is increasing every day. Every
Can I?
taxpayer is in $356,000. Our per capita income is what, like $60,000-$70,000, something like that.
Mm-hmm.
So every average American has 6x of their income on an
Yeah.
average in
Yeah.
amount of debt that has nothing to do with the debt they have, their own personal debt, their own consumer debt, or their mortgage, their car loans, or whatnot.
That is
This is the debt from the
crazy.
government, and this is continuing to increase.
Mm-hmm. Yeah.
Right. So this scenario is like, we are in between a rock and a hard place, and I think, as James put it, we do not have a choice.
No, we really
We
don't.
we either default or we print. And this print, as Larry Lepard calls it, this print, whenever it happens, is going to be a monumental print. It's going to be a big print. If we
Yeah,
thought
it's gonna be
$5
worse
trillion
than
in
COVID. Yeah.
2020, next one is going to make last one looks like, that was nothing. Right.
Yeah.
So,
Wow.
I don't see a world where Bitcoin and real hard assets, are not going to benefit.
There is no benefit to printing money besides like the government being able to bail themselves out, right? It I mean I just don't understand what could possibly be the reason that they continue to print, they continue to raise inflation, and like the people, like the people of the countries, like their lives continue to get harder and harder and harder and harder. Like I know that they have to do it to bail themselves out. I know that the closer you are to the money printer, the better it is for you, the less you're affected by inflation. But I mean, this is just playing the game to a level that so many of us have absolutely no idea about until we start looking into it.
So I think the only plausible explanation that I can come up with is this debt-based monetary system is a very extractive system.
Mm-hmm.
Why is that? In a debt-based monetary system, one person's asset is other person's liability, right? If you change that to a sound money standard, which is based on like, for example, in the past in gold, one person asset is not other person's liability. One person asset is one person's asset.
Mm-hmm.
If you hold gold, that's your asset. That's not somebody else's liability.
Yeah.
But when you hold US Treasury, that's your asset that
That is
gives you 4 or
fixed.
5% interest, but that's US government's liability.
Mm-hmm.
And everything else, and you expand that, when you buy a house, that's your asset, right? But that asset is backed by a liability, which is the mortgage. And that mortgage is your liability, but it's an asset for the bank.
For the bank. Okay, yes.
Right? So in
So
this,
then is your home really an asset if it's backed by liability?
uh, that's a different conversation altogether.
Okay.
This whole idea of buying a home as part of the American dream is the biggest fallacy and biggest Ponzi scheme, smaller than the fiat system, for
Mm-hmm.
sure. But I think coming back to the original conversation, the only reason is because an extractive system, and for somebody to win, somebody else has to lose. And guess who wins and who loses? The people who are closest to the printer, the Cantillon effect,
Yeah.
or people who have assets will win. People who are employees working for a paycheck and storing their savings in cash and do not own any assets are the ones who are going to lose.
If you have Bitcoin, will you win?
100%.
Okay, why?
Because the governments cannot print Bitcoin.
Okay, but if the governments continue to print money, what does that do to Bitcoin?
So let's say there is no other asset in the world. The only asset that you can buy is Bitcoin.
Oh,
Hypothetical example, there will only be 21 million Bitcoin ever.
yeah.
And the last 1 million is going to come out in over 100 years. So most of the people who are alive today won't be alive when the last one comes out, right? If you keep increasing the number of dollars that are trying to buy Bitcoin, the simple laws of supply and demand from Economics 101, if more pieces of paper, more pieces of dollars are chasing the same number of assets, Bitcoin, what
Yeah.
happens to the price?
It's
Price
going to
goes up,
skyrocket. Yeah.
right? And in simplest word, for example, let's say you have 10 apples and they're $10 and you can buy apples with these dollars. Suddenly, you can buy one apple for $1. But if you keep $10 apples, but you suddenly give 10 more dollars in the economy, the price of apples would go to $2 each.
$2
You add
each. Yeah.
10 more, it would go to $3
Yeah.
each. That's
Yeah.
exactly what happened every time they printed. Every single time.
Mm-hmm. Yeah. Correct. I get that. But we don't live in a world where Bitcoin is the only asset, right? And that's not going to be the case, I don't think, pretty much ever. So I guess what I'm really asking here is Bitcoin that much in demand where the price is going to skyrocket like that? I guess it is by the institutions, but if the institutions are able to manipulate the market like you're saying they are, then they wouldn't want the price to skyrocket. They would want it to plummet so they could buy it out.
You sure about
So
that?
what I'm
Okay, let's play it out.
well, that's how they make money.
I bet BlackRock charges 0.25% asset under management. Price of Bitcoin goes up, their
Yeah.
fee goes up. All they're trying to do
Right.
is
Yeah.
get as much inside the door as possible. And then they will
Before the
jack up
print
the price,
happens, and then it will. Okay. Yeah. Okay.
right? Because
Yeah.
first thing is they can only issue n number of IBIT shares compared to as much Bitcoin they hold, assuming they're not paper Bitcoining,
Yeah.
right?
What is paper Bitcoining?
I'll come to that in a minute, right?
Okay.
But assume, like every Bitcoin, every IBIT share. So I think right now the number would be like 1,750 IBIT shares equal to one Bitcoin, something in that ballpark,
Yes.
right?
Yes.
On
Yeah.
an
Okay.
average, right? So for every lot of 1,750 IBIT shares, they have to have one Bitcoin in custody. Now, custody could be with one of the third-party custodial, most likely with Coinbase Prime and whatnot.
Mm-hmm.
So in order to issue more IBIT shares, they need to have more Bitcoin under them.
Mm-hmm.
Right? So right now, what they're trying to do is they're trying to shake people out. And anytime the price goes down, weak hands, as we call them, are people who are like either leveraged or have not studied, only came in for number go up. When the price goes down, they shake out, puke out their Bitcoin and bounce, right? And go to the next thing. And then what happens is the price goes up. When the price goes up, a lot of inflows happen into ETFs.
Mm-hmm.
Guess what? Because all these, so think how these asset managers or investment bankers are working. The price goes down. On the other hand, their advisors who work with all these boomers and Gen Xers who have their investment accounts with these guys, they're calling them like, "Hey, we recommend you have 1 to 4% of your allocation to Bitcoin, and guess what? You can just allocate to IBIT." And they'll say, "Fine,
Okay.
do it."
Yeah.
So inflows come, they can buy more. Right? Sure, there
Mm-hmm.
are outflows as well, but all they care about is net inflows need to be higher over a
Yes.
period of time,
Okay.
not on a daily basis, over a period of time. And that's what you see. Like if you look at, last 2 years, it started from zero. And I think right now must be like closer to $100 billion, if I'm not wrong. Right? Or in that range, like all ETFs combined.
Yeah. Okay.
Right. So let's say, so in 4 years, or not 4 years, in 2 years, they have been able to get more than 4% of all Bitcoin supply under their umbrella. Let's say they can reach to 7%, 8%, maybe 10%,
Mm-hmm.
right? So let's assume 10%, they get 2.1 million Bitcoin in their stuff, right? And then they start jacking up the price. The price goes to 1 million, right? Just do the
Wow.
math.
Yeah. Okay.
2.1 million Bitcoin, $1 million per Bitcoin, and they're going to take 0.25% every year. Every year. It's not one time, it's every year.
Mm-hmm.
5 years down the road, the price of Bitcoin goes from 1 million to 5 million. They still get 0.25%. Their fees is going to continue to go up. So I don't think they will keep the price suppressed for too long because guess what? They want to make money.
Correct. Okay. So, okay. So, one thing that I think about a lot with Bitcoin is because of the limited supply, right? There are going to be people that probably won't be able to buy Bitcoin, if I'm going to be completely honest. And that's not to say that, I don't think you could ever buy Bitcoin. I think there will always be Bitcoin to sell as long as you have the correct price that someone's asking for, right? So do you think that these institutions will use ETFs as, or do you think this, I think the scale that ETFs are, is that just only going to increase and that's going to become more widespread because that might be people's only entryway into Bitcoin?
Probably, and I wouldn't be surprised at some point in time they basically do a share split and say, oh, instead of 1,750 shares, it's like 17,500 shares, and then
Oh,
175,000 shares, and then 1 million.
yeah.
Because they want to keep the price of each share also in the reach of a common
Yeah.
man,
Yeah. Yeah.
right?
And you need the common man. That's the thing with Bitcoin, right? Because it's scarce, there's always this question of like, what about the people who don't know about it right now while it's being acquired? They will be left behind. But this isn't realistically going to happen because we have ETFs.
It will still be happening. I'll tell you why,
People will still
right?
be left behind. Okay.
People will be left behind. If anybody thinks Bitcoin is going to solve the world hunger problem, not going to happen. If
It's
if
not,
Bitcoin
no.
is going to solve the wealth inequality problem, not going to happen. It's only going to make it worse,
Okay, yeah.
right? That problem won't be solved until our governments move to sound money standard and actually become more responsible and adopt austerity and actually start spending less than they earn.
Yeah. Yeah.
There is no other
So,
way.
yeah. So technically, I guess Bitcoin could solve it, but governments would need to adopt the Bitcoin. It wouldn't matter what the people are doing.
Correct. And again, any ETF manager, ETF fund manager, or wouldn't want to split the share or whatnot for helping the people. All
Mm-hmm.
they care about is more assets under management. And
Yeah,
they would
which
want
means
to
more
keep
money.
the price of each share to a place where it's affordable for people, right? Like if price of IBIT, so for example, let's say the price of Bitcoin reaches to 1.7 million,
Mm-hmm.
right? The reason I'm choosing 1.7 million is to make the math easier. 1,750 shares to one Bitcoin,
Yeah.
which would mean each share of IBIT would be $1,000,
Yeah.
right?
Mm-hmm.
How many people can buy $1,000 share? Not many.
Yeah, really not many.
That is the reason all these companies also do stock splits. Like whenever their share price goes up,
Too high, you need to split
they
it, yeah.
split it like 1:3, 1:5,
Mm-hmm.
1:10, or whatnot, right? And on the other hand, when the price drops too much,
And join the
they
shares,
do
yeah.
a reverse split, like some of the treasury companies are doing right now. Um, you know, um, so all that kind of stuff happens. So ETFs are not your escape valve. They are not your ticket to freedom.
Mm-hmm.
ETFs, in my mind, are only useful in two reasons. The first one is if you are an old person, and sorry if I'm disrespecting anybody, but let's say you are a person who has accumulated some amount of wealth, but do not want to learn about self custody or are not
Yeah,
physically
okay,
capable
yeah.
of, right? For you, it's better to allocate some money to Bitcoin,
To ETF.
to ETFs, not for yourself, but for your future generations,
Mm-hmm.
right? The second reason for holding a ETF, and actually I'll give you a third reason as well now that I think about it. The second
Okay.
reason is for any capital that is stuck in a place where you cannot afford, or we are not allowed legally to buy Bitcoin directly.
Are there any places like that in the world?
Yes, yes. So, like a lot of countries, for example, they do not allow.
China? No, China just tried to ban it, but they haven't.
Let's unwrap it.
Okay.
There are many countries in the world which still do not have an ETF available. and they do not allow you to buy Bitcoin. Like, for example, in
I'm
UK, you could
curious.
not buy Bitcoin up until a very long time. So a lot of people were going to MSTR, but that's not going to ETF,
Uh-huh.
right? So let's focus on the ETF first, and then we can connect the dots with the rest of the world,
Okay.
right? So,
Oh.
for
Oh.
example, if you have money stuck in a like, let's say you have an IRA account that is stuck with a brokerage that doesn't allow you to buy Bitcoin directly, and for any reason you cannot move it to a place that you can buy Bitcoin directly, right? It's better to, like, at
Buy
least
the
allocate
ETF.
some money to Bitcoin than sitting on
Yeah.
bonds, on treasury bonds, right,
Yeah.
or corporate bonds and whatnot, right? Um, like, one type of account that I can think of is the HSA accounts in the US, the health saving accounts.
hmm
I have not come across any HSA account that allows you to buy Bitcoin directly, but at least Fidelity HSA account allows you to buy any share. And when you're allowed to buy any share, you can buy IBIT,
You can buy. Okay. Yeah.
right? So if you have money trapped in type of an account where you can't access Bitcoin directly, it's okay. And you can buy IBIT, just buy IBIT,
hmm
right? This translated to the rest of the countries, like a lot of countries do not have Bitcoin ETFs, and in some places you can't buy IBIT, but you can
Yeah. Yeah.
buy.
I just found out like Singapore doesn't allow um Bitcoin ETFs or the listing of spot Bitcoin ETFs for retail investors due to high volatility,
Yeah, but
which I didn't expect that.
those
That's
people can
insane.
buy MSTR because
Yeah.
worldwide investors can actually buy U.S. equities, and
Yeah.
MSTR or strategies
Yeah.
essentially U.S. equity. Again, it's
Yeah.
not a financial
Okay.
advice.
Yeah. Could you just clarify the difference between something like IBIT that's a Bitcoin ETF and then something like MSTR, which is a BTC-TC, right?
Yeah.
Like, what is the difference?
So in simplest ways, let's talk about the spot ETF.
Okay.
The purpose of spot ETF is take Bitcoin and package it as a security that you can
Mhm.
buy in your brokerage. That's all they do.
Okay, yeah.
And just to do that, they charge you a fee, which
Mhm.
is, right, average is like 0.2 to 0.25% across all Bitcoin ETFs.
Mhm.
Right? And now there are other crypto ETFs, like Ethereum has an ETF, Solana has an ETF, and whatnot. A company like Strategy or MSTR is essentially an operating company. They have a business. If people didn't know, MicroStrategy or Strategy, they are a technology company. They have a analytics software, and the company
Oh,
was
yeah, it's like a data analysis thing, isn't it?
correct, right?
Yeah.
And they decided back in the day in 2020 to actually say, okay, whatever capital we have sitting in the company on our balance sheet, we're going to convert that to Bitcoin,
Mhm.
right? And since then, they have pivoted towards the primary purpose of their company. So the company now has two operating parts. One part is the analytical software, and the other part is they are a digital credit issuing company, right? So they are issuing credit on top of Bitcoin. So what the way Saylor presents is that he says Bitcoin is the digital capital. In the digital world, you need digital capital, which is Bitcoin,
Mhm.
and you need credit in order to keep the economy functioning,
Okay.
right?
Is this what that, like,
Correct.
strike, that
Correct.
stuff
We,
is?
we can talk
Okay,
about
yeah.
them probably in the next episode. We
Oh,
would digress a lot.
yeah.
But circling back to why, Bitcoin ETF is useful in certain cases. So we talked about two cases. One, if you are a person who has accumulated some wealth but do not are not interested or not capable of learning self custody, or do not trust yourself. It's better to trust a large bank versus trusting a third-party custodian, because at least
Mm-hmm.
investment accounts held at Schwab, Fidelity, and these places have some sort of insurance, some sort of guarantees from the U.S. government versus a mom and pop company that you found on the internet. They might disappear and you won't be able to do anything about
Correct.
it, right?
Yeah.
The second thing is, if you have trapped capital that you cannot directly put to Bitcoin, but you can to IBIT, do it. The third thing, which I have a different opinion compared to a lot of other people, I'm a big fan of never selling your Bitcoin, but I do not like the idea of borrowing against Bitcoin. I do not want anybody near my Bitcoin.
Okay, so you don't like the leverage thing that we were talking about earlier.
That's what going into, right? So bear with me for a
Yeah.
minute, right? I do not want to borrow against my Bitcoin. But let's say, um, hypothetically, let's say I wanted to borrow against 10% of my Bitcoin.
Mm-hmm.
So I would take that 10% position of my Bitcoin and convert it to IBIT. Now I can borrow using my IBIT in my Schwab account, in my Fidelity account, in my Interactive Brokers account, in my Robinhood account, wherever I want,
Mm-hmm.
right? I'm not taking a custodial risk. I can put it in the mix of my rest of my portfolio and borrow against it at
Yeah.
the SOFR plus whatever the premium, anywhere from 0% to 2%, depending on the level of account you have and the relationship you have with the brokerage.
Yeah. Yeah.
I can borrow. I am not taking a counterparty risk. Usually the rates are better. Like, for example, if I were to borrow at Robinhood today, I'll
Mm-hmm.
get something in range of between 5% and 5.5%. But most of you know, the Bitcoin lending companies are anywhere from 9 to 12 to 14%, something in that range, right? Why would I want to do
Okay. Yeah.
that, right? So when I was building when I think about building positions, I would encourage everybody to think about, okay, if you want to keep certain amount of Bitcoin for borrowing against, maybe consider keeping it as an IBET instead of trusting a random company and trusting them with custody and whatnot.
Mm-hmm.
Nothing against
Yeah.
those companies, because anybody who has decent chunk would probably have some type of portfolio too. And if you are a young person, I would highly recommend, do not borrow against your Bitcoin. Do not. Okay. If
Okay.
you are in your 20s, early 30s,
Mm-hmm.
have no wealth or very little wealth, do not try to go on leverage. The best thing you can do for yourself is focus on your active income, get skills, increase your
And
chances
just DCA.
of getting higher active income, and keep plowing your savings to Bitcoin. Do
Okay.
not play the game of, let me get leverage, let me do this, let me do that. This leverage game usually becomes helpful in when you have some amount of wealth that, like, for example, if you have $10,000 in your total net worth and you say, I'm going to borrow against my 10% of my Bitcoin. So you're going to put $1,000 of Bitcoin. They're only going to
Mm-hmm.
give you up to 50% of that. So you're going to get $500. Maybe you can go to your parents and ask for $500. And maybe you can go talk to your friend and ask for $500 and pay them with your next paycheck,
Yeah.
right? Why are you risking your Bitcoin? Do not do that.
Yeah, that's true.
So this lending against Bitcoin is a stupid idea in my mind.
Okay. But you would be okay lending against a Bitcoin ETF
Exactly.
or
So
your
if you
MSTR.
if you want to borrow against your Bitcoin, I would say take small percentage, convert it to NIBIT, put it with your MSTR and everything else that you have in your portfolio, if you have anything else. And some people are just all in on Bitcoin,
Mm-hmm.
but whatever it is, if you have decent amount of wealth and you want to borrow against something, you will put a little bit of in IBIT and borrow at the cheapest rate from the best banks
Mm-hmm.
possible, because you probably have other relationship with them too. If you bank with Charles Schwab or JP Morgan or Fidelity, and you have your 401k with them, you have your HSA with them, you have your 529s for your kids with them, put a little bit of money in IBET and borrow against that, right? Why bother, taking an additional
Your
third-party
Bitcoin.
risk where you have to manage the keys and then keep an eye on that the Bitcoin is not moving and
Yeah.
blah blah blah. Like, why
Yeah.
create more work for yourself?
That's true. That's true. Yeah, that's true. Especially since these will follow, or at least IBIT will follow what Bitcoin is doing in terms of price action.
Yes, it will follow one to one. Sure, there will be
Yeah.
some lags here and there. Bitcoin trades 24/7. IBIT trades,
IBIT does not. Yeah.
9:30 to 4 p.m. Monday to Friday, closed for
Mm-hmm.
holidays. Sure, there's some
Yeah.
lags. Sometimes there could be tracking errors and whatnot, right? And then sure, there is a fee on IBIT and whatnot, right? All that is fine. But like I personally do not like the idea of borrowing against Bitcoin. I would say borrow
Mm-hmm.
against MSTR, borrow against IBIT. Uh, don't touch your Bitcoin in cold storage.
Interesting. Interesting. Then, do you think for a young person, it makes sense to even look in the direction of IBIT and MSTR? And maybe we can just focus on IBIT and talk about MSTR in the next episode. So, however you want to take this, I
Yeah,
guess.
yeah. Yes and no, right? I know there are some people who basically say, hey, there is no point of putting money in 401k in or anything of that sort. Even if you are getting an employer match, right? So for
Mm-hmm.
people who don't understand employer match, in the US, the retirement account is called 401k. And some employers, not all, they basically say if the employee puts $1, we will match it with some amount of money up to $1. Right. So some will
Right.
say I'll give you 25 cents, some will say I'll give 50 cents, some will say I will match dollar for a dollar. Then they can put
Mm-hmm.
other kind of constraints, we can only match up to this limit, up to that limit, and then the IRS limit at the top.
Right. Yeah.
If you have, like, if you're a young person, if your employer has a 401k and they have a match, right? I would say put that money into 401k,
Mm-hmm.
enable brokerage link against that, move money there, buy IBET. If you are a young person and your income is lower, don't worry about traditional 401k, go straight into Roth 401k. Because your tax
Okay.
liabilities are not super high, but this
Mm-hmm.
IBIT for you would continue to grow tax free for you forever. Right?
Right.
Again, not a tax advice, not a financial advice, but I'm explaining how I think about these things. Right. And then, and you can basically say, I'm going to do it up to the point where of the match, right? So if employer says I'm going to only match up to $3,000, even though the limit of IRS is $24,000, don't put all 24,000. Put
Mm-hmm.
3,000. Get the 3,000 from them. So you have 3,000 money for free money, right?
Yeah.
Put that in. Use all the rest of the money. Buy, Bitcoin on chain. Move it to cold storage. Forget about it. Keep working. Keep focusing on increasing your active income. That should be the primary goal. Like only two goals in as when you're young: improve your skills and grow your active income. Second is buy as much Bitcoin as you can, as fast as you can. That's it.
Okay. Yeah. Okay.
Don't play any other games. Like, don't get into, I'm going to buy this treasury company. I'm going to, go chase that meme coin. I'm going to go on the prediction markets. I'm going to go on this. It's all gambling. You know, one out of a million would hit it. Everybody else will lose their shirt. Don't do that.
Yeah.
Do not do that.
Okay. Yeah. Fair. Do you think every young person should have a Roth IRA, or do you think that just having Bitcoin as your savings account is enough? And this might be treading a little bit into financial advice. So if you don't want to answer this, that's
No,
also
no,
fine.
I can give you my opinion, right? So it doesn't like it's not a tax advice in any meaningful way. I'm sharing what I believe. Like if I was a young person today, what I would do. Like when I was 20 years old, Bitcoin wasn't around, right? So I didn't have a choice. I did the traditional path, but whatever. Uh, if you're not in the US, if you are in a low tax jurisdiction, or you are in a place where you know you can optimize your taxes by moving around the world, like then I don't think you need to worry about it. Just get Bitcoin. Because don't forget, Bitcoin gives you freedom. IBIT doesn't.
Yeah.
Roth IRA doesn't.
Right. Right.
Right. Um,
Okay.
in my mind, as a young person, your first priority should be get some Bitcoin. Right. The Roth IRA thing or anything in IRA 401k only makes sense if you can run a DC on Bitcoin and then try to get that extra free money from the employer. And here's the reason why it's what's beautiful. The day you leave your employment, you can convert all of that into an IRA, right? Depending on Roth or traditional. And then there are places, actual companies where you can move your IRA, where they allow you to take distribution in Bitcoin. So for example, let's say when you leave your employer after working there for a few years, you have $50,000 in your 401k,
Hmm.
right? You move that 50,000 into one of these companies. I'm forgetting the name. I don't know if like Fidelity has a crypto IRA, but I don't know if they allow the in-kind redemption. Like some companies will say, oh, whenever you are withdrawing money, you have to sell the Bitcoin and we'll give you cash, basically US dollars. There are some other companies which basically say, I want to withdraw $10,000 worth of Bitcoin. And then you give them the address and they'll move that amount of Bitcoin to that address. Then you can
Hmm.
do whatever the hell you want to do with that Bitcoin.
FBTC does allow in-kind redemption.
I think you went into the ETFs. I'm talking about the IRAs.
Okay, let me
FBTC is
look at the
Fidelity's
IRA. Yeah,
Bitcoin spot
yeah,
ETF, right?
the
So
Bitcoin ETF.
there's
Yeah,
a Fidelity crypto IRA. I don't know if that allows you to, when you're
crypto.
withdrawing in kind. And I can look it up after the episode and then share the information. We
It
can like,
does not allow.
yeah.
Yeah, Fidelity's crypto IRA does not allow
I think there
in-kind
are some
transfers.
companies that allow. I think Unchained allows, if I'm not wrong.
Yeah, I'm not sure.
I think I spoke to them sometime back and whatnot. But the point I'm trying to make here is when you leave the company, you can
Hmm.
take all your money and then the employer's money and move it to Bitcoin in this account and then take withdrawals in kind. Especially if it's Roth IRA, it's beneficial. It's tax free. US government doesn't taxes you on that. Worst case is you liquidate
Worst
everything, like keep the money in IBIT. Then you
Yeah.
leave, liquidate everything,
Hmm.
pay the taxes that you would
Right.
have paid anyway earlier. There is a penalty. Most likely the penalty will be covered by the employer match and take the rest of the
Hmm.
money and buy Bitcoin on that day.
Oh,
So
okay.
how I would play it, let's say, um, keep a very hypothetical example. Let's say you can contribute $100 a month into your 401k, assuming you have a brokerage link attached to it and whatnot. And the employer matches $100 too. Assuming you are in a 20% tax bracket, right? So when you put $100 in your 401k, you save $20 in taxes, right? If you had not done it, you would have paid this $20 and you would only left with $80,
Right.
right? So you're putting 100 here. I would say
Hmm.
Take $20, the amount of taxes you saved, buy Bitcoin with that today, like every month.
Okay. Okay.
You're building Bitcoin, and instead of
And
instead of buying just $80 worth of Bitcoin here, you bought $20 of Bitcoin here, put 100 here, and 100 came from the employer. You bought $200 worth of IBIT. Yeah,
mhm.
with me.
Yeah, yeah.
Let's say you continue working there for a year. Keep it simple, right? You put
Mhm.
1,200, employer put 1,200. At the end, they're 2,400. Um, for simplicity's sake, no capital appreciation. Bitcoin is the
Okay.
same price as it was on day one, as it is on the end of the year that you left, which
Okay.
was very much like 2025,
Yeah.
right? So
Okay.
in that case, you could, when you leave the employment, you can convert all of that into, like, basically you can take a withdrawal. You can basically say, sell everything, pay taxes, give me my money, right?
Yeah.
So $2,400 that's in your 401k, a 20% tax will be deducted because your tax bracket is 20%, right? So they'll deduct $480,
Mhm.
right? And there's a 10% early withdrawal penalty. So they'll take $240 for that.
Yeah.
Yeah? So you lose $720. But guess what?
Yeah. Okay.
How much is left? If you take 720 out of 2,400, you're
2,400.
left with 1,680. And now you can take the 1,680, go buy Bitcoin. And you were buying $20 of Bitcoin every month. So you already have a $240
Yeah.
worth of Bitcoin. Plus you add
Yeah.
1,680. You end up with more Bitcoin at the end of the day than you would have if you
Than
just
if you were
bought this.
just putting.
The
Yeah.
key here is do not put money into S&P 500 there, assuming to catch up with Bitcoin.
Okay.
Because if Bitcoin goes up 50% and S&P up
Mhm.
500 only goes up 10%, you will lose money. But if you're in
Correct.
IBIT will track Bitcoin very closely. You will still lose a little bit in terms
Yeah.
of price appreciation, assuming you have a decent match that can cover up your taxes and your early withdrawal penalty. It's a
Mhm.
no-brainer.
Yeah, it is a
But
no-brainer.
key thing here is not using this $20 that you saved in taxes to buying Starbucks or buying pizza. Buy Bitcoin with that. Right? You're stretching yourself a little bit, by $20, but you're building a
Yeah.
discipline. And that's one way
Yeah.
to get more Bitcoin. Now,
And then well, now is the time to stretch yourself if there's any
and
time.
I
It's in
would
your
caveat
20s.
this is like, people will come and say, hey, my brokerage or my 401k plan doesn't allow it. Sure.
Mhm.
Tough luck. In that case, I would say, do what is better for you. But at the end of the day, getting more Bitcoin is the most important thing you can do.
Yes.
IBIT,
Okay.
strategy, they are all ways to eventually get more Bitcoin, but do not delve into that before you actually have a way to get Bitcoin itself.
Yeah. So study Bitcoin first, then use IBIT and MST or whatever if you have to.
So as I was saying earlier, right, this actually kind of creeps into the idea of the portfolio management, right? And the way I think about this is, and we can delve into this a lot more in a separate episode if you want to. Um, every portfolio has few different functions to play, right?
Mhm.
Primarily three. There is
Mhm.
the investment side of the things. Like these are the things that will grow as fast as possible. There is a stability kind of thing, which is savings account, and there is an income aspect,
Okay.
right? Um, in the old, as I say old, but like in the most recent past, before COVID, people used to say build a 60-40 portfolio, have an emergency fund, and have a 60-40 portfolio, 60% equity for growth, 40% debt for income, and emergency bucket for savings. to
Mhm.
protect you from that, a catastrophic event eventually on someday, right? Now the 60/40 portfolio is broken, completely broken, doesn't work, is dead. In New World, we know holding fiat is bad. So Bitcoin
Yeah.
is your saving vehicle, right? So if anybody thinks
Mhm.
Bitcoin is my investment, they're stupid. Bitcoin is not an investment. If you're coming in Bitcoin for a rate of return, for number go up, you'll be disappointed.
Yeah.
Like you'll be bored out of hell, and then you lose your mind and you'll eventually leave.
Yeah.
If you come in with the mindset Bitcoin is going to preserve my purchasing power, it's a great asset. That's your savings vehicle, right? If you're a young person, your income vehicle is actually your job, your business, whatever you're doing, where you're making money from. So you don't need anything that generates income when you're young. So
Mhm.
stop running after, I'm going to run covered call strategy, buy these covered call ETFs or whatnot. Do not do that, right? Because that part is covered from your active income,
Job.
from your job, your
Yes.
business, whatever you're doing, right? Whatever
Mhm.
you're doing to make money, that's your income,
Yeah.
right?
Well, I guess people want more money in the short term
Correct. Then focus on getting skills to increase your active income. That is the
as
best
opposed
investment
to,
you can do.
but then wouldn't you say that learning a skill such as, I don't know, like Forex would be something that you could do?
No, no, because
But that's still learning a skill to increase your income.
here's the thing: to make money using money, that's what any type of trading, any kind of strategy
Mhm.
requires a decent amount of capital.
You don't have
If
capital
your
when you're young.
capital is $10,000 or $5,000, even if you make 10% return a month, which
Yeah.
is unheard of, beats Bitcoin,
It's insane.
right?
Yeah.
You're making what, like $500 a month,
Which
right?
is not.
So in early years of your life, the best investment that you can do is gaining more skills that can help you increase active income. There is no second best on that front. Nothing. Nothing comes close. Start a business. If you're in a job, start a business. If you're in a business, double down, grow it. If that is not working, start another business. Do something. This is where AI becomes useful, right? AI can make you 10x more productive than you were without it.
Yeah.
And the third place is actual investment, right? This is where the likes of strategy and these things come in, right? So again, for young person, if you don't have a lot of capital, don't delve into investments yet. Focus on two sides of the equation. Instead of making a three-legged stool, it's two-legged stool, and the second leg and third leg is still figuring it out. One is gain more skills, increase your active income, and protect your future with Bitcoin.
Yes.
Right? So Bitcoin will make sure you're not priced out of things. Anything that goes in investment bucket is a thing that can actually beat, growth rate of Bitcoin.
Mhm.
Not many things
Yeah.
can. So that
Yeah.
requires you to do a lot more research, analysis, and decent amount of capital. Don't bother.
Okay. So Bitcoin will not make you money, but it will protect your money.
It will protect your purchasing power,
Okay.
right?
It'll
And
protect
as you keep,
it'll protect the value of your money.
but Bitcoin is money, right? It will protect value of your time and energy,
Okay.
right? Bitcoin
Okay.
is money.
Yeah.
Stop
Yeah,
thinking
okay.
about it in dollars. Start thinking
Mhm.
about one Bitcoin is one Bitcoin,
One Bitcoin is
right?
one
The
Bitcoin.
key thing is the purchasing power of Bitcoin will keep increasing over time.
Mhm.
Right? And the perfect example we've seen is, a house back in 2015 probably would cost like 6,000 Bitcoin, then costed like 600 Bitcoin, and now it's like what, like even with the price drops, like what, 7, 8 Bitcoin.
Yeah.
Right? If you keep one Bitcoin as one Bitcoin, your purchasing power is increasing, and you don't have to worry about, oh, I need to grow my stack.
Mm-hmm.
Right?
Yeah.
I have to
Well,
invest my
okay.
stack so it
Yeah.
grows. Right? You are growing it by chipping in a little bit every month, working hard, making money, converting it to Bitcoin.
Yeah. I think one thing is we say that Bitcoin protects your purchasing power, but then earlier today we were talking about how all these institutions have the like power to manipulate Bitcoin in the market.
In the short run.
So seeing in the short run, right? But I think when you're young and you're seeing that and you're like, this is where my savings lie, that would incentivize you to try and think of alternate ways, right? So I know it's like you have to adopt that low time preference. You have to think in the long term, but when you're young, you're focused on making and preserving your money. So watching your savings go from, up, down all the time, it's a bit contradictory.
I hear you. And I think sure, there is an aspect of low time preference, but the
Yeah.
other aspect is it would drop the fiat mindset, right?
Yeah.
If you adopt the mindset, one Bitcoin is one Bitcoin, then everything changes, no matter what happens to the price in dollars. One Bitcoin doesn't become half a Bitcoin tomorrow. $1
Yeah,
won't be
you're right.
$1 tomorrow. We know that. But one Bitcoin will be one Bitcoin, right? Like that is the mental switch. And I think I think also James and few other people, like, even Joe Bryan and Jeff Booth have talked to you about this. The idea of, this young generation feeling that they're being priced out of everything is kind of creating this phenomenon of, I need my chance. I need that one opportunity that helps me break it, right? Get ahead. And that is the
Mm-hmm.
reason we are seeing the rise in the gambling culture, right? Probably another topic to discuss another day. But you can see how younger generation and even our generation, right? There is a rise in gambling culture, which is on the rise for last 10, 15, 20 years. And
Mm-hmm.
since COVID, it's gone through the roof. It's gone through the roof, right? Look
Yeah.
at the rise
Yeah.
of Kalshi and Polymarket, like FanDuel and others were around for a long time. But these guys came out of
No, but
nowhere.
Polymarket has come and changed the game. Yep.
Yes. And now it's
Yeah,
like
Kelsey too. Yep.
everything is on them. Like people are betting against everything.
Yeah. I don't know if you know, but I get these like TikToks on my For You page that are like betting that Donald Trump will say the word and then it'll be some word. Like it could be like betting that Donald Trump will say 6-7 today. I'm gonna put $10 on there.
Because people are hoping,
It's yeah.
that they will get their chance
Yeah.
once, right? And
Yeah.
I would connect one thing, which is not Bitcoin related, but if you remember the book Psychology of Money that I
Mm-hmm.
made you read back in the day.
First one that I
Yep,
read, yeah.
yep, yep. I think there was one thing in that which basically, stuck with me, and the idea of why do majority of the people who buy the lottery tickets, are the ones who cannot afford to pay like a quick emergency. Like if their car breaks down, they can't pay for that. But they are the ones who are buying these lottery tickets week after week after week.
Yeah.
And the simplest,
And if they stop doing that and just put that amount into
correct.
their savings fund, so
But
you
but
would have
but for
that.
them, this idea of, oh, I have this $5 a week that I'm putting on this ticket, or $10 or whatever. I don't even know the price of a lottery ticket. But just saying it is like $5 or $10. If they were putting it every week for years, they will have so much more money, and not even bringing Bitcoin in the picture. Like if they just did that and put in S&P 500, they would be way better off than they were 10 years ago today, right?
Yeah.
But they do it because in their mind, that is their chance. If they win, that would be life changing for them. All they're paying is $5, which is not going to change their life, or $10, right? So that high time preference, they want to get rich fast, and that has been around for ages, but now it's on a complete different spectrum with introduction of internet and mobile phones and everything. Now you can bet on
That, and I think
anything.
COVID has just made us so hopeless. And we can talk about the COVID another time, but that has come and that has just taken so much, I don't want to be cringe here, but love and light out of our generation. And so everyone is just like, I need my one chance. And I think it's interesting because time really is your best friend, right? And this is where the power of compounding comes in, which is something that you used to talk to Vivan and I about since like forever, forever. But it really, like, I don't think that humans really understand it the same way, like, we don't really understand exponential functions, right? Like Jeff Booth says, we don't understand compounding. Um, and
Because
it's,
compounding is an exponential function, right?
yeah, exactly. So it's interesting to think about how, yes, you can tell yourself that, oh, if I put $10 into Bitcoin every day instead of $10 towards that lottery ticket, um, in 20 years, I could be in a better situation. I would be in a better situation. But there's that little sliver of like, one of these lottery tickets could be it. So it's latching onto this could be because it's this idea of like, oh, like $1 million today or 20 years down the line. Imagine how much Bitcoin you could have if you were putting $10 every day.
Yep. Wasn't there somebody shared an example? I think was it Robin who shared this, like somebody who put $10 or last 5 years, 10 years, every month or every week on Bitcoin, you will end up with like multiple Bitcoins, not just one Bitcoin.
Was it Robin?
I think that was first year, one of the first episodes, if I remember correct.
Then
But
it may have been
yeah, we'll
Robin.
we'll, we'll link the video in the description.
Yeah.
Um, the key point to understand here is everybody wants to get rich fast. Nobody wants to
Mm-hmm.
get rich slowly,
Yeah.
right? And I think we touched upon this last time, but the best example that keeps coming to my mind is Warren Buffett made more than 99% of his wealth after his 60th
Oh,
birthday. And he's been
yeah.
investing
Yeah.
since he was 12. 12,
That's actually crazy.
right?
That's
So
wild.
from 12 to 60, he was rich by any standards. Like he was worth a few $100 million, but not nowhere close to where he is today, close to $200
Mm-hmm.
billion after he has donated a ton of money.
Yeah.
That's the benefit of time, right? So if younger generation could just focus on, I am gonna keep building my skills, keep building using AI, make myself 10x better, and protect my time and energy with Bitcoin, and just let do Bitcoin and time do its own thing, you will come out way ahead, way ahead.
Yeah. Yeah, I agree. Um, And if you're listening to this, and if you think an episode on talking about AI and talking about building with AI would be helpful, we like my dad and I can talk about what we use AI for, where we see, like potential career paths, what skills AI could, help you with. Just talk more about the build with AI portion of this channel. If you think that would be helpful, please let me know in the comments, and we will have that as one of our Satoshi Sunday segments. Otherwise, we can keep kind of this macroeconomic thing going, because I think you are very good at explaining a lot of the money aspect of things, as opposed to just like me trying to do it solo. I think we've talked about a lot today. We've talked about kind of what's the Bitcoin price what's going on there, why did we hit 60K, and then we talked about ETFs, and we talked a little bit about BTC TCs, and then we talked about gambling culture. So there's been a lot in today's episode. It was a good conversation, though. I think I'm stepping away from this a little more clear with what I want to do with this decade, which I was looking forward to this, this Satoshi Sunday, because just turned 20. Now it's like, okay, I've got the 10 years. I have my goals, but monetarily, what am I doing? And I watch Bitcoin content. I make Bitcoin content. And a lot of that is just like, just put it into Bitcoin. Don't care about anything else. But then you watch traditional content, which obviously I'm still going to do. Just to stay in touch with the world, and just because I do think it's important to research both sides, and weigh your options, right? So watch traditional content, and it's like, okay, you need to invest in this, and you need to do this, and you need to have this allocation, 30% here, 30%, like that 30-30-30 rule. Sorry, yeah, that it's a lot. There's a lot
There's
going
so
on.
many
So
rules there. There is
thinking,
a 50, 30,
yeah,
20, 60,
yeah,
40, 33,
yeah,
33, 33. There are a
yeah,
bunch of things. But I think for
yeah,
younger generation, you guys have so much time,
yeah,
and very little capital. That's the most important thing.
yes.
What are you going to divide it into? If you have like $10,000 to your name at best, like, what are you going to diversify? Like,
Yeah.
and I'll end with this. Majority of the wealth is not created by diversification. It's by taking concentrated bets, right? And few examples. Like I remember very discreetly in 2022. I think it's 2022. I was looking at Palantir stock. It
Oof,
was
Palantir.
it was
Oof.
$7,
Yeah,
right? Had I put $10,000 there, I'd be sitting on a few $100,000 today. Right? It
that's
went up
true.
to $200. Like today's like whatever, 130, 140, 150, God knows whatever the number is.
Yeah,
Same thing
yeah,
with Nvidia.
yeah.
Same thing with Amazon, right? But the key thing I'm trying to say here is it's very hard to spot those opportunities. And for
Mm-hmm.
your generation, you have an opportunity in front of you that has proven itself and still has a long runway ahead of it,
Long is an
right?
understatement.
Like,
It's
if you understand scarcity, you will realize there is nothing that is as scarce as Bitcoin is and is mathematically verifiable, right?
Yeah. I think this is something that tends to drive people away from Bitcoin, right? Because when we think scarce, we think gold, we think rare earth minerals, we think silver, and to some slight extent.
Let,
I
let, let me
don't
let me
agree,
pop the bubble.
but
This thing of rare earth minerals is nothing rare about them.
yeah,
There are
exactly.
plenty available everywhere. You know what is rare there
Yeah.
is the refining process.
Mm.
So the way it works today, like it's not that US doesn't have rare earths. We don't have the you know process to refine them. So we dig them up,
Yeah, you know who does
we
though?
dig them up, ship them to China, bring
Exactly.
it back.
Yeah.
Duh, right? Gold, everybody has an estimate. Oh, this is the amount of gold on the surface. Like, can anybody mathematically verify this is the total metric tons that is available, and there will never be
Yeah.
anything more than this
Yep.
ever, right? The other things like all these the Birkins of the world and the
Yeah, one thing that's been circling on social media is that a Birkin is an investment.
yeah, because it's an artificial
I will
scarcity.
say Yes. Now, I will say if you buy a Birkin, you leave it untouched for 20, 30 years, maybe that's an investment. How many of you are leaving it untouched for 20, 30 years? How many of you are keeping it in that pristine condition, right? It's like, so there's this Instagram account. I do enjoy what the girl who runs it does, but the one thing that I disagree with that she loves to push is that your fashion can be an investment. And this I heavily disagree with, because I don't like using the term investment for just anything. I don't think you can invest in clothes. I don't think you can invest in bags, in shoes, in anything. I don't think you can invest in cars and houses, right? Like, I don't think buying like a Lambo is an investment. So it's that sentiment that's on social media. I've found that's typically what drives girls away from Bitcoin, because they're like, this is not something that I can touch. Yes, you say it's mathematically scarce. Yes, you say computers can verify it, but how am I going to know? And it's like, that's very contradictory, because you can go open your computer, look on the internet, you just have to know where to look, and you can verify it yourself and
So
trust.
let me break this.
I
Let
cannot.
me break this apart.
Yeah.
First of all, let's start with the influencer that's talking about it. And we talked about this a couple of episodes ago. What are their incentives? Why are they doing it? They're probably getting paid.
Obviously, she wants to make money.
They're
Yes.
probably getting paid by these brands.
Yes.
Right? So look at their incentives. Why are they promoting something?
Mm-hmm.
Second thing, we started with Birkins, right? So let's talk about Birkins. You go buy a $40,000-$50,000 Birkin. I don't even know if that's the price, but assume that is.
It's not the price.
Okay. Whatever. What is the price?
Let's see. Birkin price 2026. So a Birkin 25 in Togo leather is approximately 13,500.
Okay, so I was on
I
the
was like,
order.
there's no way it's 40, 50,000.
No, I'm sure there are some bags, but let's okay, 15,000. Right?
Yeah.
Why does it have 15,000 value? It's not that it is created with such fine things it has.
No,
right?
of course not. But they have those waiting lists that can be years of waiting.
And that is what is artificial scarcity.
Yeah,
right?
It's creating the demand but not having the supply.
What is stopping them to create 10,000 more bags tomorrow?
They lose the premise of why they
Follow
exist.
the incentives.
Yeah.
Why are they doing it? Nothing is stopping them from creating more. It's not that they cannot create more.
Mm-hmm.
Right? The reason gold is valuable is, even if they wanted to, it will take time and energy to create more. Producing one more bag, incremental cost of that is nothing major. For a $15,000 bag, I'd be surprised if it's more than $500. More like probably less than 100, ideally.
Yeah.
Right? But even if you say 500, like, it's all artificial. Right? Gold is scarce because it takes time. Even if we tried, we cannot find it easily. It's not that we cannot find it. We cannot find it easily. Right? With Bitcoin, even if you wanted to create 21,000,001 Bitcoin, you cannot. You can try all your power in the world.
Yeah,
you
can try all you want, but
it's not that you don't want to. It's like you cannot.
Yeah, the system will kick you out, right? Like, it will. Yeah.
Correct.
Not only will it reject it, but you will be kicked out.
So if you start asking those questions, like, why is somebody saying something and what is their incentive? And you start from that, if their incentive is to sell you something, and I tie it back to what we were talking earlier, it's an extractive society. They will make money when you lose money. There is no, it's a zero sum game at the end of the day. It's not like, a win-win situation. There is no win-win situation in this extractive world.
Agreed. 100% agreed.
If I go and put a trade in the stock market today, if I win, somebody else has to lose. Always follow the incentives, use critical thinking, ask those questions. And when somebody is giving a rebuttal about Bitcoin, ignore that and ask them like what they feel valuable. Why is that valuable?
Yeah. One thing I like to think about is, or like to bring up is what is Bitcoin's incentive, right? Bitcoin is a thing. A thing cannot have an incentive. And then you can be like, oh, but you can't tie Bitcoin to a person. And I think that's something that has been happening a lot in the news lately. And I was having conversations about this when I was with my friends last night. So that's where all this is coming from a lot. But so we were having conversations and they're like, oh, but what do you think about the thing that just came out about Bitcoin being used for people involved in very demonic stuff? And to that, I was like, Bitcoin is a thing, the same way the US dollar is a thing. In movies, when we watch, drug deals being done, and not even drug deals, weapons being sold, like black market, what do they have? They have cases of green bills.
Forget
right?
about black market. What is the global trade currency?
That's also
Like
true.
everything trades in US dollar, right? Like let's not connect the thing with the person using it. The same way,
Yeah.
if somebody gets killed by a gun, it's not
Yeah.
the gun's problem. It's the person who fired the gun.
Yeah. 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 It's like, so to that, I was like, okay, yes, I do agree. Bitcoin was used for something very, very demonic, but the same way the US dollar is used right now for what's happening in Palestine, for what's happening in Congo, for what's happening in South Sudan, right? Like, and it's really, it's just Bitcoin is a currency. And so what is Bitcoin's incentive? That's something that I try to urge my friends to think about. But the one thing that stops them is that it doesn't have this history behind it.
Sure.
Does that make
That is
sense?
that is
I
one
think,
thing that goes against Bitcoin. That
yeah,
gold has
it doesn't have
5,000 years
history.
worth of history, right?
Exactly,
But the
exactly.
my rebuttal to that is simple. We have a pure, like, what is fiat history? 50 years, 55 years, give or take, right? What has it done?
We use this term fiat, right? We're like, oh, fiat, fiat, fiat for the US dollar, for any currency globally. But here's the thing about fiat. I didn't learn this until I came into the Bitcoin space, right? So to the normal, I don't want to say normal, but to the non-Bitcoiner mind, fiat isn't even a word.
So
I had to Google that.
sure,
I had to Google
sure. So
that, right? So it's this idea of like US dollar itself has a history of how many years?
so people might not understand fiat. People might not understand paper currency or whatnot. But people will
Yeah,
understand the purchasing power of their money, right?
correct.
If you just start with that notion, what has US dollar done in last 100 years or last 15 years? Go back to the history where the Bitcoin was born,
Mm-hmm.
the first public trade where it
Yeah,
actually got a value. From that point, how much purchasing power Bitcoin has gained and how much purchasing power dollar has lost,
yeah,
right? And how much purchasing power gold has retained or gained, right? The, what people confuse Bitcoin with is, people think of it as an investment. Its value needs to go up. We need to start thinking in purchasing power, like
yeah.
gold. Like
Okay.
the reason gold is valuable is not because gold goes up. Like
Mm-hmm.
what you could buy with gold 100 years ago, with 1 ounce of gold, you can practically buy the same thing
You
today.
can,
With 1 ounce of gold, not converted to dollar,
with 1 ounce.
whatever you could,
Okay, yeah, yeah,
whatever
okay,
you
yuck,
could
yeah.
buy.
The
Yeah.
ounce, yeah.
So, for example,
Uh,
let's say a good men's stitch suit, a custom
uh,
tailored. costed, let's say,
Yeah.
1 ounce of gold at that point in time, you could pretty much get it today
Mhm.
as well.
Mhm.
Sure, in dollars, it would
Okay.
be like it
Yeah.
used to cost like $20 in 1914 or 15,
Mhm.
and it's cost like $5,000 today. But in terms of gold, it was an ounce then, it's an ounce today.
Yes.
That's the real
Yes.
purchasing power, store of value, purchasing power, maintenance, retaining the purchasing power. That's how we need to start looking at Bitcoin, not as an investment.
Okay, interesting. Yeah. This would be a good thing to touch on properly
Yeah,
for
we can
our segment.
dig into it. What is unique about Bitcoin compared to every other cryptocurrency?
It's
It cannot be tied to a person.
finite.
You can
Oh,
you can
yeah,
create
that true.
another finite currency tomorrow and say, I'm going to reduce it even
That's
further,
true. Yeah.
10 million only, not 21 million.
Yeah. Yeah, but I guess somebody could create another version of Bitcoin
They have
and
tried.
be
This is
another
not the
version
first
of
time.
Satoshi
They
Nakamoto.
have tried.
Really?
It had got multiple folks back in 2017, 18 time frame. There's a
Mhm.
Bitcoin Cash. You can search for it. There's a Bitcoin Satoshi value, BSV. So BCH, BSV, look at them. They started. So basically, they hard forked the chain and the chain didn't go anywhere. So this is where important thing is this, and this thing your generation should learn, would understand a lot better. If tomorrow a brand new social media app comes, would you go there?
Unless all my friends are going
Bingo.
there.
That's the network effect, right?
Ah,
If everybody is on Bitcoin, why would I go on this
yeah.
thing?
Correct.
Right? So that's a network effect. The other
Yeah.
thing is not being able to tie it to a person. You cannot hold anybody accountable. Like if tomorrow, and I'm hypothetical situation. Let's say they want to, they say, what, ETH is illegal. ETH is doing bad. We need to prosecute the creator of ETH. Vitalik would
Talik
at least
Buterin.
he would have to
Yeah.
go and have conversations, testify, give his
Yep.
counters, bring in lawyers and all that. Bitcoin is bad. Okay. What are you going to bring? Right? We don't know who Satoshi is. And most likely, this is my conspiracy theory here. I think Satoshi is dead.
That's interesting. I think Satoshi's a group of people.
No. And here's the reason
Really?
why. I'm yet to see a person, a group of people who will see their hidden wealth grow to $100 billion and they will not try to say, let me take a little bit. I've waited 17 years. Let me take a little bit and improve my life.
Okay. Point.
Right? The only way it's possible if it was a group, everybody's been killed.
Yeah, that's another thing. Like maybe everyone's
But then
dead.
whoever killed them would have a reach.
Oh, yeah.
So I know there is a theory that CIA created it. Maybe. I don't buy it. Right?
I think it was a video I watched a while back on like Isabella's channel that was like the CIA created your Bitcoin, and it was like debunking that FUD, which I thought was kind of
I don't
funny.
buy it. Again, I haven't
Yeah.
watched that video, but I don't buy it because why would CIA or why would any government create something that will destroy the government?
Yeah.
Right?
Yeah.
That's the first thing. The second thing is I strongly believe, again, I cannot pinpoint who Satoshi was, but I have a very strong feeling whoever that person was, either they have lost their, passphrase and they're like, what, dang it.
Yeah.
I can't show my face to people and say, I am Satoshi and I
Yeah.
forgot my
No, but
passphrase.
Satoshi wouldn't. Yeah,
Right?
like
So chances of that, if you created, you understood how important passphrase is.
yeah, fair.
Right? So the second likelihood is you're dead. Right?
It's probably the first likelihood.
So yeah, so and the first one is debunked already in
Yeah,
my head,
yeah.
right?
Yeah, I guess you're probably
So
right.
I think whoever
Jumping ship
whoever he,
then.
she, they, them was,
Yeah.
they are not alive, and either they
Mm-hmm.
didn't have the family or their family had no
Yeah.
clue they created something like this.
Potentially. Or Satoshi forgot the passphrase and
Which
then
is
passed
unlikely. Like
away
a
and then all
creator
that,
would
which,
understand how
yeah.
important this thing is, and they would protect
Yeah.
it, right?
Yeah. Yeah. But yeah, that's all besides the point. We've kept this going for like 2 hours now. So let's wrap things up. For everyone listening, let us know what team you're on. Yeah, what do you think? Who do you think Satoshi was? Is Satoshi dead? Is it a group of people? What's your crazy Satoshi conspiracy theory? But I think that was everything I had to say for this episode. Dad, do you have any closing thoughts?
I've said it multiple times on this episode. If you're a young person listening to this, build with AI, protect with Bitcoin. That's all that matters.
All right. Build with AI, protect with Bitcoin. As I mentioned earlier, if you guys would like more on the build with AI part, let us know in the comments, and that will be something that we can get into in a future Satoshi Sunday. Other than that, I hope you enjoyed today's session. I know it's very long. I know it's Super Bowl Sunday as well. So you guys, speaking more for me, I want to go and watch the Super Bowl and see our team win.
Go Hawks.
Yeah, let us know. Go Seahawks, bro. Go Hawks. We're doing so good. Got JSN, we got Darnold, and it's gonna be good. Trophy's coming home. Anyway, so let us know what you thought in the comments for this thing. Let us know anything that you'd like us to discuss in a future episode, because I'm thinking next week we might go and discuss more about strategy and other treasury companies. With that being said, share, like, subscribe, comment as usual, and stay curious, stay skeptical, and stay orange pilled. I'm your host, Nikki, and this is my dad, and we will both see you next Sunday for Satoshi Sundays number 5.